All right, everyone, welcome back to the channel. In this video, we're going to be speaking about how to know if price is at a discount, right, or a premium. But in this case, we're going to be speaking about discounts in this video because we are in a bullish market. And we're obviously looking for price to buy price at a discount. Okay, so I'm going to go up here. I'm going to draw something out for you real quick. Okay, so when we have lower lows and lower highs being formed, okay, you only want to be looking at the POIs that are at a discounted range. Okay, so for example, this here is at a discounted range. This here is also at a discounted range. Okay, and I'm going to show you why. Okay, so if we have a POI down here, somewhere in the middle, it is less likely in this price range, right? Somewhere in the middle of this price range, price is less likely to bounce off of this and continue higher and break structure to the upside to continue bullish. Instead, okay, we want to see price at a discounted range, okay? And at a discounted range means below the 0.50%, okay? So you can take your fib, and from this low to this high, anything below the 0.50%, anything below this range, price range is 50%, is considered a discounted price, okay? So anything in between here and anything in between here, okay? So that is why prices, you'll see a lot of the times when you have a POI in the middle of a price range, or even maybe somewhere up here, price is just going to blow through these, okay? And instead, it's going to react to something at the extreme, right? Some extreme POI that is left behind at a discounted range, okay? And you can see this is obviously at the 0.79. Would be a nice point to buy at. And this is where you want to look for those POIs, okay? Below the 50%, all right? Let's get rid of this and do the same thing for this price leg, okay? So from this low to this high, price is at a discounted range, okay? So this is where you want to be looking to buy, anything below the 0.50. Okay, so this should take a lot of time off your hands if you're struggling and you're looking at all these POIs that are up here, right? You want price to reject off here and take it higher, even at the 50%, okay? The 50% works sometimes, but the higher probability setup, okay, what's more probable to happen is when price is at this 0.62 to 0.79 range. Okay, so this is where you want to be looking to buy. And this is ultimately what a discounted price means. Okay, the best analogy for it would be, let's just look at one price leg, for example. Okay, so if you have a POI in the middle of this price range, that means that it is at around 0.99060. Okay, let's just say that, for example. Okay, so this is at 0.90. What did we say? 0.99060. Okay, you obviously want to be buying lower. Okay, if smart money is going to get involved, they want to find price at a discount. They want to find price at a discounted range at a cheaper price, right? You want to buy at 0.97 500 rather than 0.98 900. Okay, and that's just the best analogy I can give you. So I hope that makes sense, right? If you're going to the market and you see something for $9.89, and you can get something for the same object, let's say it's just for an apple, for example. Okay, so you have an apple that's cost is $9.89. Okay, but you also have an apple's cost is $9.75. You're obviously going to buy the one that's at $9.75, okay, because it's cheaper and it's at a discount. Okay, so I hope that was able to make sense. I hope you guys are able to make sense of that. I know it can get a bit confusing, but in simplest terms, it's anything below the 50% mark of a price range. Okay, and let's just take it for example here, right? From this low to this high, price is at a discounted area, right? Below the 0.50. All right. Take another fib from this low to this high, from this low to this high, price is at a discounted range, hence why smart money gets involved here. Okay, again, take this high and this low, price is at a discounted range at the 0.79. This high and this low. Okay, price is now below equilibrium. Okay, so this is where we're ultimately looking to buy UF. Okay, and we have a nice POI that was left behind here on the daily time frame. Okay, right here we have a nice order block, a nice valid order block that broke structure to the upside 1, 2, 3, 4 times. Okay, and it also has nice volume behind it. So this is ultimately where I'm looking to buy UF in terms of the daily, right? Obviously, I'm not just going to set a limit order here. I'm going to be going down looking at lower time frames for some accumulation schematic, okay? And keep in mind that we also have this order block up here, right? Which is at a premium, okay? But the chances of price blowing through this are very more likely than it to be respected, okay, for at least a long period of time, okay? Why? Because we're ultimately bullish on the higher time frames. Okay, so if we go down to the there was also a nice POI left behind, a nice clear POI on the 5 hour that has nice volume behind it, and that also broke structure here and took out equal lows. Okay, so we just took these equal lows. Ultimately, I want to see this low be taken because we have another pair of equal lows, right? This low is relatively equal to this one. And I want to see this be taken ultimately to buy the market here, somewhere around here, and to take to the upside, right? And I'll be taking profits at this supply area because there is a chance that price could, tap into this and just reject. Okay, but nonetheless, this is what I'm looking at for UF. Okay, I want to sell here if the market, if price comes up here to the 5 hour POI and take this ultimately down to the daily. Okay, so this would be a nice counter trade, a short-term trade, so that we can eventually buy the market to the upside for a longer term trade for just a higher probability trade. Okay, so I hope you guys were able to learn something from this. I hope I was able to get my point across with discounts and premiums. And until next week, good luck and good trading.